markets just won't quit. This week, Wall Street once again brushed against record highs, even as Washington remained in political chaos and global investors braced for new data that never came, thanks to the US government shutdown. The Dow Jones and S&P 500 continued their climb, lifted by strong names in healthcare and industrials. The Nasdaq, though, took a small step back as tech giants faced renewed pressure from US-China trade tensions. Still, the broader market tone stayed optimistic. Traders are betting more than ever that the Fed will start cutting rates in the coming months. Beyond the US, momentum stayed strong. In Europe, London's FTSE 100 hit a fresh all-time high, powered by heavyweights like AstraZeneca. In Asia, Japanese equities gained on upbeat earnings sentiment, while emerging markets saw some profit taking in stocks but inflows into bonds, a sign that investors still want yield, just with less risk. Oil prices swung wildly again this week, caught between geopolitical tensions and uncertainty over global demand, a reminder that stability remains fragile beneath the surface. On the macro side, the US economy keeps showing surprising resilience. Retail sales rose 0.6%, and industrial production inched up 0.1%, pointing to steady growth despite political noise. But with the shutdown freezing key data releases, including the all important jobs report, markets are flying a bit blind for now. And then there's the US dollar. After months of strength, it finally lost some ground. The DXY slipped about 0.5% this week, with rate cut bets rising and global yields catching up. The greenback could be entering a softer phase. Some analysts even see it drifting toward the 93 to 95 range later this year. So where does that leave investors? On one hand, record highs and steady growth. On the other, political gridlock, rising yields, and fading dollar dominance. As we move deeper into the final quarter of the year, one thing's clear: markets are walking a tightrope between optimism and overconfidence. The next big move will depend on what comes first: a rate cut, an economic slowdown, or another political storm.